Let's get more on the US debt deadlock with our next guest. Mikio Kumada is a global strategist at LGT Capital Management. He joins us now live from Singapore. Good day to you, Mikio. Thanks for joining us today.
Good morning in London.
Do you have
Hello, Mark.
full confidence and faith that the debt ceiling will be raised in time?
Well, full confidence is a big word these days, or two big words, but we do have confidence. We think there will be a deal, yes.
So, implications for the markets negligible?
Well, if there is a deal, I think the immediate response will be relief. Then it'll depend on the details on how large the deal is. What the details are of the spending and tax on the spending and tax side. At the end of the day, the big story is that the credit quality of the U.S. and also in Europe, or in general of all the old industrialized developed countries, is not improving, and that doesn't make their debt very attractive or increasingly attractive. So
where do we put our money then?
Well, we think relative to government bonds, corporate bonds of good quality are interesting, and also equities. There is a case for equities to be made as an asset class.
What is the case, Mikio? Because I know you think that equity markets are likely to rise to new highs sooner rather than later. What's the thinking behind that?
Well, the thinking behind that is that is the same as with corporate debt. Companies are having a good time making money. They are in a positive cycle. They have good balance sheets. They have lots of cash, and their earnings are growing because they're coming from a restructuring phase and from a very deep recession. They're recovering. So in that sense, they are healthier, in many cases healthier than many of the established governments these days.
And the US is your preferred stock market. I see you're neutral on Europe, negative on Japan. The US is the big one, is it?
The U.S. is the big one, yes. Right now it is the market that has the best structure purely in equity market terms worldwide. You have to hedge your currency if you're not a U.S. dollar-based investor, but purely in equity market strength, I would say right now it's still the U.S. Yeah.
Mikio, thanks for joining us. Wish we had a little more time. We'll speak to you soon. Mikio Kumada there, LGT Capital Management Global Strategist.